Reliance hit record highs as crude surges. Nifty Oil and Gas becomes the top gaining sectoral index. Adani stocks surge after Canton Fitzgerald sees a 51% upside for Adani Enterprises, assigns an overweight rating on the stock. Government's collections through divestment stand at over 12,500 crore rupees so far versus the budget target of 51,000 crore. Divestments primarily led by Coal India, NHPC, RVNL, SJVN among others. SpiceJet prepares a 900 crore rupee overhaul plan after receiving the first tranche of funding last week. The plan comprises of cost-cutting measures and improvements in their operations. Now, before we move on with the show, let's see how the markets have fared today. My colleague Neeraj Shah joins us for a quick market check. Over to you, Neeraj.
A strong day for the equity markets. I don't think anybody anticipated such a strong up move on the first day of this new, very eventful week. Fed speak, budget, so too many events, but a brilliant start, led principally by Reliance Industries in terms of points contribution, with the big boy clocking in the best gain in maybe 20 months. It hasn't moved at all for such a long time that when Reliance made such a big move, people would take notice. But it was, yes, in terms of point contribution, it was Reliance, but in terms of overall sentiment, there was a lot beyond Reliance. ONGC amongst the top gainers, up about 8%, coupled with Oil India. GAIL had a very good set of numbers, and I think that too did really well in the quarter, or in the day today. So that was one such name with a great move. Then you had the Adani Group stocks. Adani Energy, by virtue of the Cantor Fitzgerald report, was up about 5% or thereabouts. Adani Ports had a gain. Adani Green post results, Adani Power post results had a good move too. So that bucket of stocks did decently well for itself too. HDFC Bank up about 1.5%, and it contributes about 18-20 points, not too much, but point being that HDFC Bank not contributing to the downside is a big deal as well. And there were not too many losers. There was a Cipla, there was an ITC, but not too many heavyweights participating on the downside. Broader end of the spectrum too. One, the power names, as is their wont, come back on every good day, right from PFC, REC, to SJVN, to Inox and Inox Wind, to NTPC. You had almost all the power names come up. You had infra names come up, from IRB to NCC, some very strong moves for that bucket of stocks as well, and some very strong result reactions from Shakti Pumps to Zen Technologies to Shriram Finance, on which brokerages have a consensus uptick. So by and large, you could see that there was this sense of optimism which was not accounted for at the start of the trading day. Could the election results or the Bihar play have to do something with it? Maybe. Not too many people thought so, but who knows? A clutch of things, including the fact that oil upstream did so well, leading the markets to have a really strong day. Let's see if we have a bit of a continuation in tomorrow's trade.
Thanks a lot for that, Neeraj. Now, the Adani Group stocks, like Neeraj mentioned, witnessed a roaring rally as brokerage firm Cantor Fitzgerald initiated coverage on Adani Enterprises and assigned an overweight rating. My colleague Harsh joins us with the key highlights from the report. Harsh, over to you.
Cantor Fitzgerald has initiated coverage on Adani Enterprises and given an overweight rating, target price 43.68 rupees a share. Very solid upside, 40% upside plus even from here. Now, let me break down the reasons in 4 quick points. First off, what they're suggesting is as India moves from the towards the third largest economy, 2 things will be required: physical as well as digital infrastructure, and Adani Enterprises are the core forefront to enable India to do exactly that. So that's one. That's the quick first point. The second one that the note seems to suggest is that most analysts on the street seem to be ignoring something like an Adani Enterprises, and Adani Enterprises is the 10th largest non-financial company listed on exchanges, and despite that, it's largely ignored by the analyst community. Therefore, investor awareness for the company is lower, investor knowledge is lower, and therefore it also gets lesser coverage, which is the second reason why they are quite bullish on the stock as the coverage starts to increase. Also, what they're suggesting is that Adani Enterprises over the last year or so has made notable progress with regard to where its balance sheet is. Earlier, all the growth was funded through debt. Now, they are consciously repaying debt, toning down on that debt number, and therefore the balance sheet is actually becoming stronger day after day. Several businesses incubated by Adani Enterprises. It's a master incubator is what the note suggests, and that is the one big positive. It has 6 businesses which are literally free as per the SOTP valuation which Cantor Fitzgerald has extrapolated, and therefore they believe that there is also a bit of margin of safety, and as some of these businesses list, they will unlock a lot of value as well. So quite bullish in terms of the note that's coming through.
Thanks a lot for that, Harsh. Now, moving on, the government's collections through divestments stand at over 12,500 crore rupees so far, but that's compared to the budget target of 51,000 crore rupees. Janani Janardhanan joins us with more. Janani, what's driving divestment figures and what's the outlook going forward?
That's right, Pallavi. In fact, actually, divestment this year has been quite slow, mounting questions on the government's fiscal marksmanship. So, as you said, of a 51,000 crore target, the government has achieved 12,500 odd crores. Now, what's leading this, of course, are a series of OFS and smaller transactions that have happened. The Coal India transaction, which is an OFS, fetched about 4,500 odd crores. The other significant one, of course, was NHPC, RVNL, SJVN, all of these two fetching about 1,300 odd crores each, bringing us to a total tally of 12,500 odd crores. Now, what's important, of course, to notice is that most economists are not quite happy with this figure, and they expect that this quarter, even considering 1 or 2 OFSs in the last quarter, will still only come up to a figure of 15,000 or 16,000 crores. This is just marginally above around 20%, which does not look good for the government, adding more fiscal stress to them. Now, their outlook, however, for the upcoming fiscal ahead of the budget is not demurred. They're still looking at a 50,000 crore target because largely there's that uncertainty around IDBI Bank, which did not go through this year. So that seems to be one of the things that people still continue to watch out for. Of course, this year was also largely loomed by, the Pawan Hands, BPCL, and the Shipping Corporation transactions that did not go through. So market conditions and, of course, a good market sentiment, given this would be a good year, possibly FY25 for disinvestment. But all bets are off until Thursday when we get the government's figures. Back to you.
Thanks a lot for that, Janani. So the government, once again, very likely to miss the divestments target. But as my colleague Janani pointed out, they're likely to continue with an elevated target of about 50,000 crore rupees for the next budget as well. Now, moving on, SpiceJet is all set for a revival plan. The airline has prepared a 900 crore rupee overhaul plan comprising of cost-cutting measures and improvements in their operations. My colleague Vinay joins us with more details. Vinay, over to you. What can we expect going forward?
So the Pallavi, the story was started on Friday because the company received the first tranche of the investment that it said that it will raise. So the first tranche came on Friday, that was of 750 crore rupees, and together with that was rupees 160 crore in ECLGS scheme, that is the borrowing that the company is getting from the government, which it has borrowed up to 1,000 crores now from government through this scheme. So this is overall making a 900 crore plan for the company, and it will mean that the company will look at the funds more judiciously also. So the company has said that every decision on expenses will go through Ajay Singh, which is the CMD of the company. And on the operations side, it has said that it will be upgrading its fleet and also looking at their on-time performance, which has been dismal in December. If you look at the numbers, it says the company's on-time performance was 29.9%, which means that only 3 out of 10 flights were on time in December. And the company's market share is also at 5.5%. So the much needed boost that was coming from the company has been announced today. And it was said in an internal note to the senior employees of the company. Maybe the official announcement will come later. And it has also said that this is only some part of the overall 2,250 crore funding that it has already planned. So much more to go in the future. But this is not going to cut everything for the company, because auditors have now and then raised flags regarding concerns of the company continuing as a going concern because of its net worth not being up to the mark. So this might give a boost to the company, but much more is needed for the company to improve and do better in the future.
Thanks a lot for that. Now, meanwhile, the Delhi High Court has ordered SpiceJet to pay $4 million to Indian lessors. Earlier as well, the court had directed the airline to make a payment to the same lessors by January 3rd this year. This payment was ordered to be made in installments between December 21st, 2023 and January 3rd, 2024. But moving on, Dr. Reddy's Laboratories will release its third quarter earnings tomorrow. Let's go across to Monal Sangvi for more on the key monitorables to watch out for.
Well, yes, after Cipla came out with its results last week, the stock has been seeing pressure. Now, what's going to happen to the big names that are coming out with their results this week is to be seen. For now, we have Dr. Reddy's that's coming out with its results, and the expectations, let's peg them versus the Bloomberg consensus. So the Bloomberg consensus says that the PAT is expected to be up around 6% versus the same quarter last year at around 1,300 odd crore rupees. Revenue up 3%, EBITDA up 2%, and the margins are expected to come in slightly lower at 28.4 versus a 28.7 in the same quarter last year. Now, what are the key things that are to be watched out for in the commentary that could make or break the stock reaction post the earnings? Well, the first is the US revenue growth. The company has been talking about certain price erosion stability that it's been witnessing in Q2. So we need to see whether that's even bettered further, then that would be a positive. Also, there's an element of Revlimid. So the base business growth is something that needs to be watched out for. Then we have the update on the first ever biosimilar that Dr. Reddy's wishes to launch, which is Rituximab. And for that, its Bachupalli facility underwent an inspection with 9 observations. Now, the company is yet to tell us whether it's obtained any clearance or when can we expect a re-inspection and what's happening on that facility, which would give some clarity on the launch timelines. Other than that, the India business is another key monitorable because the company had spoken of a weak acute season in Q2, which is usually the case. So now the expected run-up is expected in like Q3. So we need to see whether that's played out the way the company has expected it to. Apart from that, margin guidance is something that we need to look out for, whether the company is maintaining its margin guidance at 25%, and what exactly is the new launch pipeline in the US for the company. Now, we need to understand here that for the past couple of quarters, analysts have been raising concerns that Dr. Reddy's does not have any big launch in the US, and this could potentially harm its revenues in the next 2 to 3 years because the growth prospects seem numbed. But now, if the company were to announce any key product launch, then that would be a positive for the company.
Thanks a lot for that, Monal. We'll continue to track what happens on that front tomorrow. But let's slip into a short break. Stay tuned to NDTV Profit. We have a lot more lined up on the other side for you. Again, welcome back. You're watching The Reporter on NDTV Profit. Now, Byju's is set to raise $200 million, that's about 1,600 crore rupees, through a rights issue at a steep valuation haircut as the edtech pulls out all stops to navigate legal and financial challenges. Let's go over to Rishabh Bhatnagar, who has more on this. Rishabh?
That's right, Pallavi. We have a breaking coming in on Byju's. Its unicorn status has officially been quashed. It is going to raise about $200 million at a post-money valuation of anywhere between $220 and $230 million. So that's a steep valuation cut from its once $22 billion worth. It's now only about $20 to $30 million worth. So all the legal and financial issues that Byju Ravindran and his edtech has seen over the past months, this is what it is culminating to, a unicorn status that has been quashed. A bit more about the rights issue that we're seeing. To compare that, the amount that Byju's is raising, Byju's founders have put in about $1.1 billion of their personal wealth over the past 18 months to actually keep it afloat. This is what they've said in a statement, and that the funds that they're now raising, they will be used to clear immediate liabilities and meet operational requirements. So it's not, so it's a very clear working capital crunch that they're trying to avoid here. There's plenty of legal battles that they're also drawn into that they now need to navigate out of, and this rights issue is yet to be fulfilled. So we'll see how that goes now.
Thanks a lot for that, Rishabh. Now, the Delhi High Court has upheld legal provisions related to the National Anti-Profiteering Authority. It's time to go over to my colleague Charu Singh for more on this. Hi, Charu.
Hi, Pallavi. So the Delhi High Court on Monday upheld the anti-profiteering provisions in the GST framework. They've basically upheld the section 171 of the CGST Act, which says that if a company has been provided with tax exemptions, then the benefit of those exemptions should be reflected in the prices of the commodities that the consumers are buying, and the consumers too should be benefited in the bigger picture. And a lot of companies have faced a setback because of this ruling. These include Johnson's & Johnson's, Patanjali, Abbott, and many more, even Hindustan Unilever. And they said that the anti-profiteering provisions are against the constitutional provisions. However, the court said that these are for consumer welfare. The measures are for the benefit of the consumers and hence are not against the provisions of the constitution. However, a detailed order on the same is still awaited, and we'll be back to you once we get our hands on that.
Thanks a lot for that, Charu. Now, moving on, let's look at earnings once again. Marico India announced its Q3 earnings. Profit rose by 16%, but revenue dipped on weak rural demand. My colleague Sesha joins us with more details about the company's Q3 performance. Sesha, over to you.
Right. So as we look at the numbers, in the first instance, we have seen profit up 16%, but revenue fell for the third straight quarter. Now, this was on account of weak rural demand, lower pricing of edible oil, and also the currency depreciation in select overseas markets. Now, if we look at the other operational numbers, operating profit rose 13% to 513 crore. That is exactly in line with the Bloomberg estimates, while margin widened to 21.2% versus 18.5% a year ago. Now, this was on account of softening commodity prices as well as lower expenses that the company had undertaken. Now, coming to the volume growth, the volume growth in the October-December quarter stood at 2%, which is the slowest pace this fiscal. In the preceding 2 quarters, the volumes grew at 3% each. Now, Marico has been flagging rural sales on account of higher inflation, and the company has reiterated that the trend has still not changed, with rural offering little to cheer. Now, in addition, there are constraints on liquidity and profitability in the general trade channel as well. This is having an impact on the overall consumer goods sector. Among the key input inputs, copra and edible oil prices remained at the lower level. So that is what aided the margins. So this is what is coming in. We'll update and we'll bring you more such information as we see the presentation.
Thanks a lot, Sesha. Now, the big picture concern continues to remain weak rural demand, and it will be interesting to see what the government announces in the upcoming interim budget for the rural sector. But for now, it's time to once again slip into a very short break. Stay tuned. We'll be right back. Hello and welcome back. Now, you can go from Reach Candy to Marine Drive in about 5 minutes straight. Yes, you heard that right. A tunnel, part of the upcoming Coastal Road project, will be inaugurated by the second week of February. NDTV Profit's Saloni Kothari took a drive inside the undersea tunnel. Take a look.
Inside the undersea twin tunnel, which is one of its kind in India, part of the much awaited upcoming Coastal Road project that is estimated to be done by May of 2022. Now, talking about the twin tunnel itself, the highlight here is that it's made below the sea level of about 20 to 25 meters, and it's supposedly to cut the travel time between Reach Candy to Marine Drive. Now, let's take a drive around and see how much does it actually help you to save your travel time as well. This was quite a drive. It took us about 5 minutes to reach the other side through the tunnel, which has been taking you about 30 to 40 minutes by road. We spoke to BMC's executive engineer to understand the highlights and the ventilation system that has been used inside the tunnel.
वेंटिलेशन का सिस्टम जो है बहुत जगह आपने देखा होगा कि वॉल माउंटेड फैन रहते हैं, तो इसमें हम लोगों ने सकाडो सिस्टम जो फर्स्ट टाइम हम लोग इंडिया में यूज कर रहे हैं, उसमें जेट फैन रहते हैं। जो जेट फैन रहते हैं वो एयर को सक करते हैं, फिर विद प्रेशर नोजल में से विद प्रेशर उसको बाहर छोड़ेंगे। मतलब उधर से जो लीनियर मोशन में जो एयर छोड़ा हुआ जाएगा वो इधर तक बाहर निकलेगा। हम लोग जो अभी फिलहाल जो हम लोग फरवरी का फर्स्ट या सेकंड वीक में चालू करेंगे सिंगल लेन, मतलब साउथ बाउंड ट्रैफिक जो चालू करने वाले हैं वो थड़ानी जंक्शन से नरीमन पॉइंट तक उसका ट्रैफिक जाएगा, और वो हम लोग का जो जिधर से जो ट्रैफिक जाएगा वो टोल फ्री होगा।
This is one of the twin tunnels which is expected to be done by Feb, and the other tunnel is expected to be done by May of 2024. With camera person Prahlad Shinde in Mumbai, Saloni Kothari for NDTV Profit.
That's all we have for you on this edition of The Reporter, but stay tuned to NDTV Profit for fresh news and updates.